The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Hopefully we're going to have Stan Harley as our guest here at 9:30. We're having a little bit of technical difficulty putting in the price charts today, so I'll walk you through these, and then later on I'll have them posted in the Tiger Den. These were from the newsletter 24/7 that I always do on Sunday night. And of course, the one that we've been following quite closely has been that E-mini S&P. And if you remember that we mentioned that, we can post the charts. The first one we're going to post is we'll do it a little differently right now. We will post the one for the FTSE. You'll be able to see the pattern completing here, very similar that we have in some of the others. And then I will do the DAX next, hopefully. And then we will move on to that S&P chart and show you what we're looking at here. Folks, I know you're listening to the news, a lot of you, and it's the end of the world, but believe me, we are ready for one heck of a rally here, in my opinion. Here's the chart that I was referring to from last Sunday night. If you'll notice here, we have these double ABCD patterns down there at that 2460 level. We said once it went below 2570, had a high probability or worst case scenario getting down. And you'll notice that 1.27 line that's there, that came in at 2445, and the low last night near the close was 2440. Now, this may or may not be the low, but we're right over this time cycle of the full moon that is due tomorrow. But there's also the possibility that these things could fail. You got to remember that. Remember, when prices go down, that fear is a greater emotion than greed. And the reason for that is fear has physical characteristics that you can see. Diaphoresis, or sweating. Your lips become parched. Your eyelids, your eyeballs become expanded. You have petechia in your hands where the blood rushes to the heart to keep your heart working. But in euphoria, as markets making tops, you're wondering which color Porsche to buy and whether the Rolex should have diamonds or not, or the kids are going to go to Vassar as opposed to City College in Tucson. Anyway, these are the things that are different about greed versus fear. No one presented that any better than Edward Lefevre in his book about Jesse Livermore, Reminiscence of a Stock Operator, because he talked about that very much, and that fear is a greater emotion than greed. It's one thing as prices go down, it looks like a good buy here, a good buy here, a good buy here. Pretty soon it's good buy car, good buy house, good buy plane, good buy wife. So you got to put a stop in somewhere. There's also there is a possibility that this could be a really meltdown here, folks. I mean, very similar to what we had in 2008 and also what we had in 2000 and also what we had in several other bear markets back in 1974. But it's acting technically pretty much like it should have, but a really, really bad day on Monday to the downside would negate all of this, and we would be going down big time. We are in a bear market. We are going to get a rally sometime in the next, hopefully that's a terrible trading word. In the next few days, we should come up with either today or tomorrow, and tomorrow's Saturday, but we should be bottoming, and then we should have one heck of a rally. And this rally should take us all the way up for probably 6 weeks into the end of January, and that's what we're looking at. So we'll see if this is going to be the case. I'm going to put up the chart of the NASDAQ composite, because that has gone below our projected level, which was at around 6630. We went 200 handles under that. So, these markets, as we mentioned, they experience more power on the downside, and that is because fear is a greater emotion than greed. Now, I wanted to bring one other chart to your attention. This comes from our friend Jim Bartolioni of B50 Partners. and I'll bring it up here to let you look at it. This is the cash market of the S&P, and what he's doing is he's showing the time similarities of what we're looking at here in the move down, and we're seeing some of that right now. And what he's saying here, using things with Saturn retrograde and direct and things, is that we're over some type of a bottom potentially. And again, the key word here is potentially, and it doesn't necessarily mean it's going to be correct, but it's just probabilities of what we're looking at. So let's remember that quite a bit. Now, of the FANG stocks that we looked at yesterday, the only one of the FANG stocks that gave up the ghost and broke down badly, of course, was Apple, and that's been one of the weaker ones. It should have had a good bottom at 160. It held there early morning, and then when the market started to roll over after the open, it just continued down and got down to the 156 level. So that's another one that is under, another great deal of pressure. Also, the IWM has, this was one that I wanted to show you how we handled this yesterday. We were buying the IWM on the open on yesterday. It opened at 133.20. And that was a 1.618 expansion. And because we really respect that 1.618 expansion, I suggested we use a very, very, very close stop, like 131.98, only risking like $1.20. And of course, it worked for a while, but then later, as the market corrected, it broke down and went way below that level at 130.30. Now, the way I'm going to handle it now is I want to wait and see, because of the fear that's out there and the things that are going on, in the news, which is always interesting. I'm going to wait till Monday to see how the markets react today, because if they close badly today, we're not going to be looking at a very nice week next week, would be my guess. That's these markets have lined up as about as perfect as you can get. I wanted to show you one other one that I mentioned yesterday, and I missed something, and I don't know if it means anything or not. But let's take a look here at the New York Stock Exchange Index for just a second here. This is the ABCD pattern. You can see here time and price coming together. It's a day off now. It should have been, it was not on Thursday. It was not Wednesday. If the bottom came in, it was on Thursday. But if you look at that ABCD pattern, the smaller one, since December the 5th to where we are now, that's those strong 2 weeks down. That's a perfect ABCD pattern. The market rallies up to the 382 at point C and comes down sharply. And if you'll notice right there, that expansion was 1.618. So it can't go any lower. I mean, it can't even open lower today. So that's about it. Now, Ruby's asking us to take a look at oil, and I certainly will. But we have a break coming up here. So when we get finished with this segment of the market, we're going to talk about the oil market. And believe me, it doesn't look pretty there, because we've broken down below the coveted 78% level. And my goodness, it doesn't have any friends. But boy, it's been screaming that it's had some weakness here. So we'll take a break. We come back, we're going to look at oil.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're going to, one second, we'll take a look at crude oil here. This is from the newsletter last Sunday night, and if you'll notice here, we make a notation here that if crude oil went below that 49.50 level, which was the 1.618 expansion, again, there's that ratio again, 1.618, that it was quite bearish. You can see the fact that we made the low and then we rallied $4 a barrel up to $54 a barrel, almost $5 a barrel, and then we start making lower highs. This is not the sign of a market that's made a major bottom. That's why we were so emphatic about what was happening with it, because it was in a situation where it really didn't have any room for, it was like the moment of no return, because it was that bearish, and it certainly appears to be doing that. Now let's just take a quick look at where we were. We'll update this to where we are right now, because here again we're setting at a very, very important ratio. We're, believe it or not, folks, we are at the 61% retracement of the low from January of 2016, when it was trading at $28 a barrel. Can you believe that? And here we are, a 61% retracement. You can see that breakdown that we brought to your attention at 49.50. It dropped a quick $4 a barrel in just a couple of days. Watch this level closely, because a lot of people don't look at Fibonacci numbers, and a lot of times they don't work, but boy, when they do, they surprise a lot of people. So whether it's going to hold this 45.50 level or not, remains to be seen. Anything below 45 suggests you're going to drop another $6 or $7 at least down to the $7 range, lower at the $37 a barrel in oil. And believe me, if it traded at 24 back in 2016, we could certainly get there again without too much trouble. So that's what we're watching here. The price of gasoline and heating oil, all that stuff has been dropping. And remember, about 6 weeks ago, when that oil was trading at $77 a barrel, the long-term weekly 61% retracement with a 3 drive to a top pattern, that was suggesting very, very strongly that this market was going to have a one heck of a move down, and it certainly did. And if you were waiting for rallies to get short, they were short-lived. I mean, they didn't last more than a couple days, and they weren't very much. even when they went down. Let's take just a moment here. I'm going to talk a little bit about the bond market here, because we did get up to that old level that we saw before at 46. I want to bring this up, but the important thing about the Treasury bonds, folks, is that when markets are making rally highs or rally lows, new highs, new lows, and they're doing it with a lot of news in the picture, the one thing that I'm watching is the fact of what happens with open interest, because in the Treasury bonds and Treasury notes, we've had this really strong rally here for well over 2 months. And here we are, as markets are rallying with the Fed in there doing everything, the open interest is dropping, okay, as prices are going up. That's very, very bearish, folks. That means there's not new players coming into the market. For 3 days in a row, Tuesday, Wednesday, and Thursday, we've seen drops in the Treasury notes and Treasury bonds. This has nothing to do with this December contract, because that's basically history. There's nothing there anymore. It all has to be, the fact that people are not reinstituting the contracts into March. So that's a very, very bearish situation. So kind of remember that. That's I think it's relatively important. Is in the ABCD up to, well, Mr. O'Brien, if it gets to 147.13, my hat's off to you, but it ain't going to be anywhere near 170, my friend, so we'll see. Merry Christmas to everybody at TFNN and the whole world, but I don't believe that we're going to see it. Folks, take a look at the long-term bearish chart on that Treasury bond. If it goes to 155 or 160, it's still bearish. So we'll see. Anyway, we'll see what's going to happen. Okay, I don't know what you're seeing in Chinese there, Marshall, but nobody else does either. Does that seem Merry Christmas? I have to ask Sarah to check what this means in Chinese, because I really don't know. So we'll see here. What does that mean? And what's oh, Merry Christmas. Yes, Sarah says it's Merry Christmas. Okay. TBR, what? TPT. I'll post the TPT here in just a sec. Let's just do it right now. We're in the Christmas spirit here, and since I'm got a few minutes here, we'll just take a look at it, see if we can get to this level here and get the TBT up. And we probably should look at TLT, since it's the sister of it. One's the bond and the other one is the notes. Let's get this up here. TBT here. Get this here. TBT has had some type of a reversal yesterday, coming off of a 786. Hold on just a second here. Get this out of the way. I got to get rid of some of these lines, otherwise you guys will you'll go nuts here, and you don't want to go nuts. Here we go. We'll get this up here. Take a look at it. There we go. We'll get this here, and you'll be able to see we're right at us. We just made a 78% level in the TBT yesterday, down there at 35. That could be pretty, very, very interesting. Let's take a look at this long-term Treasury bond market, and let's see if we can find anything bullish about this market here, other than a dead cat bounce. We'll look at the weekly here, and you'll be able to see it, what it looks like, because this is nothing more than a DCB. Nothing against the cats, but anyway, you'll look here, you'll be able to see this is a very bearish market here, and that's what we're watching. By the way, we've been told that Deutsche Bank is now trading below $8 a share in the UK, and so that's going to be an interesting phenomenon to look at too, because it's looks like it wants to go lower. The problem that we're having in the market, folks, has nothing to do with, well, let's put it this way. It's my opinion that what's happening in the market is the fact that we're looking at something wrong in the banking index. If you look at that banking index, it went through the numbers that we were looking at like they didn't even exist, and that is a very, very bad sign. And we're seeing the same thing happening with the semiconductor stocks. And some of the key stocks like Goldman Sachs and some of the others are just looking, absolutely horrible. And they should, because we're over this major low. That's my opinion, that we're over this major low. Back in March, this low should be very similar to the low that we made back in 2009 and also the one that we made back in 2002. And the reason for that is we've got the psychology of the market turned from bullish to bearish over these last 7 weeks. If you remember, in September and October, I wrote that special report saying we were going to see one big move down. This is the worst December since 1931. And I think we're going to see a rally that is going to just knock the socks off the market. How it's going to be unfolding, and maybe it doesn't unfold. Maybe it's just going to be something really, really minor in the next 5 or 6 weeks. But I'm looking for about a 5 or 6 week rally here if it's correct. If I'm wrong, and if I'm wrong, we got to reevaluate. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We've been asked to comment more about a potential rally that I see happening here. You notice back in September, we made that 3 drive to a top pattern up there at point A. Then we come down A, B, C, D format that we really like to see. The move down was equal in AB and is equal in CD perfectly. You'll notice that the 1.618 expansion occurred yesterday in the NASDAQ. So it's important that we don't close lower in the NASDAQ today. Now we're over this pretty big cycle along with this full moon that we're seeing right now. So this is the whole key to this. But the fact that the market's been down for 10 weeks like this, we did have a couple of weeks there during November where it rallied for 1 week and then 1 week in December and then down. So 8 of the 10 weeks has been down, which makes it pretty much an outlier event. And the fact that it is the worst December since 1931 would tell us that we're looking at something that could be significant. Also, today in the news, I heard on Bloomberg that this was one of the worst performing markets since 2008. In fact, it equaled, the number of stocks down. But in 2008, folks, we dropped a whole lot. We were down 85% in the NASDAQ, and we're only down not even 30% here, around 25% in the market, which makes it our normal correction. I base everything on what I'm seeing here on this ABCD pattern that is just lined up just as good as it can possibly get. Might be off a day or two. It might be totally wrong. And if we're down Monday, it's totally wrong, because if it doesn't hold with those cycles low in here, that's a major failure. And you're going to be sucking eggs if you stay long this one, because it's got to hold right in this area. It's just that important. The fact, the way the market's acting this morning, it doesn't look like the bottom might be in. We had a low of 2440 in that S&P. We rallied, we always rally about 40 or 50 handles easily, and we got up to 85, 87, and now we're backing off a little bit. So we'll see whether it's going to hold. That's it. The reason why for the rally is twofold. The fact that we're 10 weeks down means you should get 3 to 5 weeks up. That's a normal correction, and that would take us into that Bradley high that we're looking at, which is around the 3rd or 4th week of January. I haven't posted that yet because it's a little far out in the future, but that's what I'm possibly looking at. And folks, I've been bearish for a long time. I haven't been bearish. Well, I covered the shorts that we were talking about just the other day. I covered those last Friday, and I knew I possibly did it earlier. I focused on that we could have one more week down into that full moon, and that's exactly what's happened. And it can't get all the move, but if you get part of it, that's the best thing. Bernard Baruch said in his book, his autobiography, My Own Story, he said, I made a great living of buying too soon and selling too early. And that means he was getting a lot of pieces out of the middle. And that's what you're trying to look at. The key today is to watch this crude oil. I mean, change subject here for a minute, but the crude oil, yeah, that's right, Tucker. In 1931, the Dow was at 77.90. That's the 10-minute move nowadays, that's for sure. But they didn't have computers back in 1931 either. As a matter of fact, the market didn't bottom until 7 months later. The market bottomed on July the 5th, I believe, Basil tells us. That was around 41 something in the Dow. And that was a low from the high of 389 that was on September the 3rd of 1929. And it took 29 years to take those highs out at 389, and it never looked back. But we live in a great country, got lots of problems, but everybody else does too. We'll work through these somehow. Hopefully we'll get together in the future and have a wonderful holiday for everybody, but we'll do one thing at a time and walk through some of these things. So the importance of today's close will be very, very important. And if we don't rally on Monday, we're looking at something that is very, very dangerous on a technical basis. No question about it. I wanted to take just a moment here to share with you something that one of our listeners here at TFNN trades quite a bit, and I chat with him quite a bit. And we'll see what's going on here. If you take a look here, this happens to be the natural gas market, folks. It is such a beautiful trading market. We owe our hats off to Mr. Z here in the den, because he certainly alerted to us the fact that this thing really moves. Just look at the move between December the 19th and where we are right now. We go from 390 down to 354. That's $4,000. We rally up $5,000, come down, make another double bottom at $5,000. Folks, $5,000 is 100 handles in the S&P. We don't see 100 handle moves in the S&P in one day very often. Yesterday, even as bad as it was only 35 handles. So this is the pork bellies of the energy markets. So if you're really interested in learning how to trade volatility, that's one that you should pay attention to. There's another one that is that volatility index is doing very little. It's not telling you that it's the end of the world. I mean, take a look at that volatility index chart. And, you know, I have said all along from 6 or 7 months ago that you should always hold some volatility contracts, because you're going to see increased volatility, and we're starting to see it more and more. This is just the beginning, folks. You know, this is just the beginning. It's going to be more and more as you see some of these things occur. So just keep in mind that it's not going to be easy, but it's going to be fun. And like Mark Douglas says, trading is simple, but it's not easy. So you need to pay very, very close attention to some of these things. Someone's asked a question about the gold market. Folks, we made that big pattern in gold yesterday at the 1271 level without the help of silver, and certainly without the help of platinum. Platinum has no friends at all. Silver has very few, but they could break out at any time, I suppose. And we did make that 1271. That was a 50% retracement off that last high we made at 1335, I believe, when we had that triple top up there. So that's an important number in the gold market. And it's not backing off much, but with all the news and all the political things that are going on, we're holding up really well in the gold market. I think that's what it looks like, you know, from my perspective as we look at some of these things this morning. We want to watch the crude oil market, folks, very, very closely down here, because of that low we made at 45.30. That's the last stand that it has, because if we go below that, you know, you're breaking below the 61% retracement on the long-term weekly chart, and closing below 45 would be a extremely negative situation, in my opinion. As far as the currencies, you know, we've held that 115 level in the euro. It's held relatively well. We were up there yesterday again, and attempted it again last night, up around at 114.70. Broke about 80 pips really, really quickly. So that triple top is still in play for that. So we need to watch it, you know, really closely. That's what I would be paying very, very close attention to here this morning. Let's see, the S&P trading at what, 24.78. The low overnight was 24.67. So there's a little bit of support probably at 24.60. But the important thing is the close today, because if they close into the sewer today, that means some serious stuff could happen on Monday. We'll see. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, a very interesting question has been posed to us here at TFNN because we have this holiday coming up, Christmas on the 23rd or 25th, Christmas Eve on the 24th, and that it'll be a very, I think it's short trading day, I believe, half a day. That'll make it quite thin. So it's going to be very interesting. I still believe we're over bottom. I don't know. Hey, if this bottom doesn't work, we got someone to blame it on, folks. Norman, call it to the minute Winsky. So we'll see if Norm was listening, and he'll give me a Skype here and tickle my feet to tell me to shut up. I posted a chart here from the Elliott Wave International folks. They're saying a kickoff to a large decline. That's certainly possible, but it also looks like an ABCD pattern that is coming up pretty very closely in here. What we're looking at here, we got all the way down a little lower than that 2506. So, and it could easily melt down too, folks. You're absolutely. Thank you very much. Fletch just told us it's a half a day Monday, and that's good. We're closed on Christmas Day. In fact, almost the whole world's closed Christmas Day. They don't even do electronic trading, as I recall. It'll start probably either late on the night of the 25th or early in the morning of the 26th. So we'll see. But the question Bob posed was holiday markets on Monday is basically meaningless in the terms of the next 5 weeks. I absolutely agree with that 100%. Because first of all, it's going to be limited trading. Most people in Wall Street, they've had a good year. They've got their Christmas bonuses. It's going to be a skeleton's cruise there. That can cause extra volatility just because there's nobody on the other sides of these markets and they're not in front of their computers. So that's always a possibility. But come in Wednesday, it should be everything normal. And then it doesn't look like Santa is going to be coming this year. Hey, we got Stan Harley on the line. Stan, how are you doing, buddy?
Good morning, Larry. Good morning. Good morning.
Good morning, Stan. Everybody wants to know, is it the end of the world?
It's not the end of the world, Larry, but we are in store for some downside here. In my judgment here, we are in a bear market. Not a protracted one, but nevertheless a bear market. And for me, my definition of a bear market is made up of two things. One, it means a decline in the 49-month cycle, the 4-year cycle. And secondly, these declines typically average on the order of about 20% from high to low. The Dow Industrials, by the way, is kind of a backdrop. I look at what are called natural levels or price octaves, basis the Dow Industrials. And folks may recall back several years ago at the 2007 high, we got a little over 12,500. That represented significant resistance at that point in time. We went down into March of 09. made a 4-year cycle bottom there. Now we've moved up to the next level, which is Dow 25,000, and that too is imparting similar resistance. And we made 2 stabs at that, one in January of this year and again in September, October of this year. And now we're declining. And the bottom, when it comes, will be another, what I call a 4-year cycle bottom. That cycle is 49 months over the long haul. It expands and contracts. Sometimes it's 30 months, sometimes it's 70, 75 months, but the average over the long haul is about 79. It's about 49 months. I think this cycle will probably contract to about 37, 38 months, a little bit shorter than the average. So when you add 37, 38 months onto the February 2016 bottom, that says maybe April of next year where this thing finishes up. So that's what I think we're doing. I think we're declining now, probably going to ultimately conclude. My best estimate right now is April of 2019. In the very short term, I think we're nearing some kind of a tradable low. I think it probably comes on New Year's Eve, thereabouts. I've got a number of Fibonacci relationships that cluster about December 31st. So December 31st, plus or minus a couple days either side of that date, I'm looking for a tradable low. Then I think we're going to get a violent rally, but it'll be in the context of a counter trend move, which has more downside to go. Ultimately, I think you're going to see a 20% haircut from high to low.
Okay. How much are we down now from the highs, Stan? Are we pretty close to 20% now? Or no, we're not. Yeah,
I think the S&P is off maybe 15, 16%, somewhere in there. So we probably got about 2/3 of it behind us, maybe 3/4. But ultimately, when I say 20%, I don't mean 20.000, but in that neighborhood.
Sure, I understand. Stan, when you were on last time, you were warning the folks because of the new highs to new lows and advanced declines was screaming something's not right here. Is it still looking as bad as it probably looks even worse now, doesn't it?
Well, we're in a declining environment here, clearly. This one was interesting because it was not telegraphed by a roll-off in the unemployment data, which is what is fairly typical for major pivotal turns. I normally see unemployment reach its best level in the then current cycle, and then unemployment starts getting worse. And then typically about 6 months later, the popular averages reach a high point. That didn't happen this time. Also, we didn't have much warning in the advanced decline line either. So I'd say this decline is going to be somewhat similar to what we saw between, let's say, May of 2011 and October of that year. A lot of people don't recall that, but the popular averages actually for 6 months went down 20%. But it was all in the context of an uptrend that continued. And I think, and that high right there we had on May the 2nd, 2011, also was not telegraphed by a roll-off in unemployment or the advanced decline line. So this high is going to be similar to that 2011 decline in that there wasn't much warning, but nevertheless, we're probably going to get about a 20% haircut from high to low.
Stan, someone's asking, do you follow any sector that might be on your radar right now to buy or sell? Any of the the financials or any of the others, energy?
Not from the long side. I think when you're in a broad market decline like this, all of the averages, the Dow Industrials, the S&P 500, the New York Composite, they're all in declining mode, and there really isn't a quote safe sector. From the long side, I look at the bonds. I've been very favorable, as you know, to the bond market, the treasuries, and I think they will continue to outperform on the upside here. But sector-wise, stock market, as a general statement, I think the dominant trend is to the downside, at least for the next 4 months.
Okay, that makes great sense. Listen, I want to thank you for being our guest today, and I wanted to wish you and your wife a very Merry Christmas and Happy Holidays, and we're going to have you on sometime after the first of the year. Does that sound okay?
That sounds awesome, Larry. My best to you and all the listeners.
I hope you don't get too much snow up there in Phoenix, so who knows? You know,
Not much
Stan,
chance of
they do get snow. We've been there a couple of times. Of course, we get a lot of snow in Tucson because we're in the mountains, but you do get a little bit of snow once in a while in Phoenix, about once every 10 years. But thanks for joining us, Stan Harley. We really appreciate it.
My pleasure.
You bet. That was Stan Harley, folks, of the Harley Stock Market Letter. And we're going to take a little break here and then come back and take a look at the markets towards the end and review what we're talking about earlier this morning about the importance of yesterday's lows. And that's it. That's a Big 10-4. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the New York Stock Exchange Index. That's the broadest of all the indices. That's the one that the mutual funds, do their ratings on and their calculations all the time. They used to have an index for it, but it had lost interest and they stopped using it there at the knife many years ago. But that's important. Now let's take a quick look at one of the larger banks, the largest bank in Europe. Oh no, that's not true. Hong Kong Bank is. Anyway, but if you'll HSBC, if you'll notice here, the correlation here between Deutsche Bank and Lehman Brothers is very important. Lehman Brothers was one of the reasons why we had the 2008 crash. So there's a possibility that Deutsche Bank is going to have to be bailed out by Germany. I do not believe they're going to let that their flagship bank go to tapioca, folks. You have to remember, folks, that the largest banks in the world, the big five, the first 5 banks are all Chinese. So pay close attention to it. That's something that we need to be watching. The Nasdaq is leading the market down. Of course, we've broken some pretty good support there in the Nasdaq, but we're still in an area that these FANG stocks are holding up. And a really bad day today, they're not going to hold up, and that means that you're going to be looking at some real serious thing. There's not really any serious damage done yet to the NQs, folks. It's just having a normal. Let's just put this up here to let the folks see where we are here on a basis here from really short term, just to give you an idea. In the Nasdaq, from the low yesterday to where we were, we just made a 50% retracement. So there's not a whole lot happening in that right now, but that means that it could very easily change without too much trouble. And believe me, that thing jumps around a lot. So for it to move 100 handles is absolutely nothing anymore. So that's a key thing to be watching. The thing over the weekend is going to be great because we got the Christmas holiday coming, and very half-day trading on Monday. So we've got Saturday, Sunday, Monday, Tuesday, Wednesday. Have a wonderful time. Take care of somebody that needs something. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.